Hi everyone, it's always nice to meet you on a new episode of our Gold Price Weekly Forecast. Gold today, in the last trading session of Friday, gold spot printed a closing price little above $1,859 per ounce, numbers rounded and the market is closed. And on the last week, gold traded as low as $1,807 per ounce and as high as $1,865 per ounce, numbers are rounded and the market is closed. At the moment, and from a technical point of view, we can say that gold is trading above its all daily simple moving averages. It's neutral to bullish, and depending on the news, actually, because the latest news pushed the price of gold higher on the news of invasion of Ukraine. However, the RSI readings are moderate, and the support levels at 1845, then 1828, then 1817, very much important. The resistance levels at 1865, 1870, and 1910. The pivot on the weekly chart is located at 1843, and on the last trading session located at 1848. Those will work as immediate support and as buying on the opportunity. That's all. Moving now to the economic calendar. On the economic calendar for the coming week from the United States, we are waiting for Fed Bullard comments on Monday and Thursday. It's highly important. And the PPI on Tuesday and the retail sales on Wednesday. That's all for the economic calendar. We're moving now to the trading strategy. Hi again, it's always nice to meet you on a new episode of our Gold Price Weekly Forecast Gold today. If you are new for this video, just let me guide you how this part is going to work out. We are going to start with a quick recap, and then we will have a quick analysis of the US dollar movements and gold chart, and we'll arrive at a conclusion. Starting with a quick recap in our last video, we have actually been expecting a rally toward the 1828 to 1830, and we have been also looking for a fall below it 1780 in case that happened, because it's gonna make let's say a sell-off with momentum in this market, but that option did not happen. Now, before going through the US dollar chart, just let me remind you of the factors that affects the movement of gold. It's the US dollar, the yields both have inverse relationship with gold, and you have the geopolitical unrest and the seasonal demand, those having a bullish or let's say a positive relation with gold. Also, there is a question that we have to ask ourselves. It's what kind of a cycle gold is trading at the moment. Gold is trading in what we call it a tightening cycle. Unlike the past 2 years, there was quantitative easing, and all the central banks around the world are lowering the interest rates. Now we are seeing the inverse of this movement. This environment in general, it's not so much bullish for gold, but this is we are going to discuss in the coming section. Moving to the US dollar chart, actually you got to be bullish on the US dollar. The US dollar, as we said, in terms of the DXY, is not gonna give up unless it hits 102. For the time being, we're expecting the DXY to rally up to 98.5. So far, we do believe any dip at the moment is going to be bought with a target of 98.5 at least. Also, the geopolitical unrest and the situation in Ukraine is also supportive for the US dollar, as it's treated as a safe haven currency. Moving into the gold chart, I brought with me today the monthly chart of gold to show you that the situation that we are having at the moment in the gold market is highly crucial. This is a replica almost of what happened in 2011, 2012. It's similar to what is happening right now in 2021, 2022. You see this pattern of consolidation. In 2012, it was followed by a crash. Gold went all the way down up to $1,160. because of the tightening and the interest rate hikes. Now, at the moment, we don't know what is the outcome of this move, but it's going to be a massive outcome. Either gold is going to rally up to, let's say, 2300 to 2600, that area, or it's going to collapse all the way down up to 1300 to 1500 area. What we are gonna do at the moment, we cannot judge, because the last rally in gold was fueled by geopolitical unrest and the news of Russia invading Ukraine. What we'll do now technically, if this market comes back, avoid shorting, and if this market comes back toward 1840, it's a buy, use a stop loss, or if it breaks above 1877.5, it's a buy, the target will be above 1900, and avoid shorting until this geopolitical unrest settles down. That's all for our video for today. You are invited to join us in our free Telegram room. The link is on the description, and it's also on the video. It's totally free, just to help you guys trade this market. And please share, like, and subscribe, and I will see you hopefully next week in another video.